Hey guys, this is Karthikeya Kanwal from Apex FinServe and I'm back with yet another expiry analysis video for you guys. Now, as promised last week, I did say that I will continue the weekly analysis video more over, rather than the daily videos because frankly speaking, daily was getting a bit hectic in my schedules, so I had to, move on from that. However, the expiry analysis videos will continue nevertheless. Now, without wasting much time, moving on to what we have for tomorrow. The first thing, as usual, the equity side first. We have the watch list. Now, what we have here is a first long trade on SBIN. Now, SBIN was in a steady higher low structure on the early time frame, which is most often a healthy sign for a consistent uptrend or a sustainable uptrend. However, it had a really tragic downfall rather over the last couple of days, and it seems to have stabilized at a long time support of around 425. This also happens to coincide with the swing low, nearest available swing low. So we're going to go for a long exactly there. Stop loss placed under that support level at 420. Ideal targets 1% on the upside. Moving on to the second trade is on Mindtree. Now this is on a textbook example of lower high structure. We are going for a really simple short at the nearest available swing high, which is from where we anticipate that it's going to make a new lower low at 2830. Stop loss at 2860. Ideal targets 1% on the downside. The third is on HUL or Hindustan Unilever. Now this one has a really good range breakout that's happening. So the trading range that you have right now is from about 2395 on the high side to 2355 on the downside. So about a 2% range, more or less approximately. So if this is being broken out, because the candle has closed, I cannot really say decisively whether it has broken out now. But tomorrow, let's say you have a flat opening, it looks like a pretty good bet to me because this low is higher than the previous low, which is again higher than the previous low that came before that. So it does have a positively sloped trend line if drawn there. So it seems like a good bet to go long at 2380. Stop loss at 2350. Ideal targets 1% on the upside. The fourth is on M&M, where we are going to go for a really easy short at a historical supply zone and resistance at 790. Also, the high low structure that we had here, the pullback has been quite drastic, which does point to the possibility that the structure may not continue anymore. So we're going to go for a short at 790. Ideal targets 1% on the downside, whereas the stop loss is placed at 800. The final equity trade is on Cipla, where we are going to go for pretty much the exact opposite trade despite having a lower high structure running. The reason being similar to what we had on M&M, the length of the pullback here is, I believe, more than 50% of the lower low movement, and also the extent of or simply the difference between the two swing lows is not that much, which does indicate that the selling pressure, although impulsive, is not really sustainable at this point of time. So we're going to go for a long at 900, which by itself is a big round psychological support. Stop loss at 890. Ideal targets 1% on the upside. Now this marks the end of the equity side watch list. Moving on to the index side of things, because that you guys seem to love the most. Starting with Nifty first. Now Nifty has been in a really stupid trading range since I believe 2 weeks at least, after the big up move that it had in the beginning of August. After that, it has been in pretty much the exact same trading range. I remember talking about these levels last time as well, the 16200 on the downside and 16300 on the upside. Both of these levels have been tested by now, but the levels still stand and the price has closed somewhat midway. So the safest way would be to trade the break of the range itself. Go for longs above 16350 and go for shorts under 16200 or 16175 just to be safe. If you want to trade inside the range itself, it's of course going to be a bit more aggressive, but for option sellers it might end up being a bit rewarding as well if the range breakout doesn't actually end up happening tomorrow. When I move on to the option chain, the immediate resistance comes out to be at 16400, just outside of this range. Many people have made the strangle side of things the short strangle, at least it seems so from the option chain, with 1.1 million added contracts, which is quite hefty. However, from that point onwards, on the OTM side of the calls, the contracts have not been added as extensively, which also signifies that 16400 is pretty much like a make or break level for Nifty. If that is broken on the upside, we'll see plenty of short covering happen. We'll see plenty of people taking fresh longs, simply because people have not actually shorted any of the further call strikes. That is from my understanding. Significant resistance comes out to be at 16,500 with addition of 360,000 contracts, which, despite being a big round number, generally we observe that the 500 strikes have more change in open interest and more hefty total standing open interest when compared to the strikes that fall in between. However, this time, as I said, it's the opposite. 16,400 has a much heftier change than 16,300. When I talk about the support side of things, I have immediate support at 16,300. Now, it's not exactly support from the charts because the price has seemingly closed under it, but it's still the nearest strike that you can have. Now, here you do have a negative change in open interest, which means that people don't expect this price to be held very, very strongly. But still, the total open interest is pretty significant at 3 million contracts. Significant support comes in at 16,200. Now, this one too had negative change in open interest. So you have a lot of put unwinding going on here. That does signify, at least on the shorting side of things, it does signify that the writers are not anticipating these higher levels to be held on strongly on Nifty. So the option chain as of now does look pretty bearish. The only contingency here is that 16,400 is not broken on the upside. 16,200 being significant support, negative change, but total standing at a very big 6.7 million contracts. The PCR of volume comes out to be at 0.96, which is almost above 1, not really above 1. So you can say it's slightly aggressively bearish, definitely not moderately, because it's not in the 0.8 range. Moving on to the second chart, that is Banknifty. Now, Banknifty is also echoing similar sentiments. However, in this case, you do have a range contraction of a thing going on here. And even if I look within, even if I look within the range itself, I have a small lower low, lower high structure that is happening right now. So as of now, this range is the immediate trading range for me. That happens to be from 35,950 on the top side to 35,650 on the downside. It's about 300 points odd range, but break of this range is going to give a really strong decisive move, because there's a minimum of about 250 to 300 points of gray area before you reach the other zone on the upside or on the downside. When I move on to the option chain, or when I talk about the option chain, I have immediate resistance at 36,000 with 770,000 added contracts, a respectable number. Significant at 36,200 with 130,000 added contracts. The support, however, comes really close at 35,800, which is pretty much the current market price, with 52,000 added contracts, and significant, of course, at 35,500 with 721,000 added contracts. As of now, I would say, if 35,800 is being held tomorrow, then you can go for a pullback based long on the downside near 35,600, which gives you a nice RR of placing the stop loss under the nearest available swing point, as well as the significant level of support. If you want to go short, then you can go short definitely near 35,950, which gives you again double confirmation near the zone as well as from the option chain. Now, this is it for today's analysis. I have forgotten to calculate the PCR of volume for Banknifty in a hurry because I was getting late for the video. However, by the time I share the written down analysis, the exact same things, before the market opens tomorrow, I will make sure to calculate it and include it in the pen down version. So if you want that to actually study while live market, if you want my charts or if you want my option chain analysis, please check out our Telegram channel at @ApexFinServe. I will be posting everything there before the market opens so that you can actually make use of it. I hope you have a really wonderful, exciting, but green trading session tomorrow. And thank you so much for being patient with the videos and giving your constant love and support. As usual, if you like the analysis that was shared, please don't forget to leave a nice comment, subscribe to the channel, press that like button and hit that bell notification icon as well. Thank you so much for watching. Have a good night. Bye.